Good morning, welcome to this Phoenix Blue update on Friday the 19th of August. I'm Tom Colley and I'll talk to you about the markets and the news this morning. And we've had a week so far, certainly, that's been dominated almost exclusively by the dollar. The dollar's been weakening right through the week. We had a real big move down on Tuesday and another move down yesterday down to a significant level. So that will be the subject of what we talk about this morning predominantly. But before we do anything else, let's just have a look at the news. News through yesterday. Overnight, we had some strong employment figures out of Australia. This was a very interesting figure. This is the retail sales on the pound. Had been forecast at 0.1% and came in at 1.4%. A really, really significantly higher amount. Probably more significant is this is a post-Brexit vote figure, which means that the British public are out there buying more strongly than certainly would have been anticipated. It doesn't appear to follow the sentiment measures that are being reported, but the net result of that was a strong move on the pound, which we'll have a look at in a moment. We also saw some positive manufacturing index and unemployment numbers out of the States. They didn't have any significant positive effect on the dollar that's been falling all week. Today, really the only thing we've got on today is the core CPI and the core retail sales for the Canadian dollar. Okay, so here is the dollar index. This is Tuesday, the big bearish bar here. We had a bit of a ranging day on Wednesday, but yesterday we had another significant bearish bar here that broke below the bottom of this channel stroke trend line here, down tested $94 here, and appears to potentially be retesting this trend line now. So quite significant there. The next area we'd be looking for to the low side would be down at $93. And the way things have been moving, that does look potentially possible. As I say, we've had a break below, but we're testing this level here. We'll need a close above this channel stroke trend line to convince me that we're not coming down to this downside down to $93. If we look at the euro in comparison, that's almost a direct inverse picture. We've got this trend line here which is reversing from being an uptrend here. Then we've got the trend moving below the level, but yesterday broke through and again looks to be retesting this level, this trend line. This 1.135 euro level appears to be the same at the same level as 94 US dollars, and potentially this next level here is the equivalent of 93 US dollars, with that being the April equivalent of the April low on the dollar, which was around 91.50. So we can see a clear correlation between those two, and this is an opportunity that if we do get a break above this level at 1.135 today, I'll be looking for an intraday level to take that long to that next level, equivalent to 93 on the dollar index. Over on the yen, we didn't quite see yesterday play out to the extent to the downside that we would have expected from the dollar. We came down, we tested around 99.50 again, but I believe we had Bank of Japan intervention stopping this going any lower, because if you make a direct comparison between this chart and the dollar chart, bearing in mind dollar strength is up here, yen strength is down, there has been a lack of correlation that we would expect at this point. A significant touchdown at this circa 99.50 level again, so I would suggest the Bank of Japan have been intervening at that level and therefore will potentially continue to do so. So an interesting trade might be to have orders placed at 99.50 or thereabouts, looking to the long side, if only back up to the intraday, back up to the 100 level here, simply because I think we'll see that level respected because of that intervention again. Over on the pound, this is the 4-hour chart because we're really looking at a somewhat post-Brexit confined area of the chart most of the time at the moment. What we saw here, this is the strong move on the news. We saw those retail figures that came through somewhat, well, unexpected and certainly unexpectedly strong. As I've already mentioned, the measures of sentiment that the press talk about have suggested that post-Brexit retail sales should be weak because optimism and confidence amongst the British public is limited, and that clearly seemed to offset that. Many reasons are given, such as the weather and things like that. I'm not able to comment on that. From my perspective, we've just got a bullish move there. We're now down under this trend line here. We see a break above that. We have some potential to consider upside on the British pound for the first time, really, from my perspective, since we actually had the Brexit vote. Because even though we've been back up to higher levels, our bias has always been to the downside. But I would certainly have an intermediate bias through to the upside if we break this trend line here. This is the Aussie and this is the weekly chart. This is just to show you how the Aussie's capped below this big weekly trend line here. It's been at this level, testing this level for the last 2 weeks. It appears to be at a top, and it may take a really significant fall in the dollar below that $93 level for the Aussie to actually break out on that dollar weakness, simply because it's not showing enough strength compared with the euro, which is right up at resistance. The Aussie isn't. It's at a resistance level here where it closed last night. Where it closed last night and also where it closed last week, but it has been higher, so there isn't as much dollar strength in there. So it will, as I say, it would take something significant for that to break above there in terms of dollar weakness. What it does indicate is if we go back into dollar strength, then there's plenty of scope to further downside on the Aussie. On the Kiwi, somewhat similar. We've reached a level here that, although the dollar continues to fall, it appears to be capped about this level here. So again, unless we see some extreme or something more extreme in terms of dollar weakness, I would expect price to remain under there. And then if we get that dollar strength back in, I'd expect Kiwi weakness down to this level here, certainly, that I've identified as a range here. So potentially a currency that's stronger than the Aussie, but still at this moment in time not strong enough to break out without further dollar weakness. The other one that we were watching yesterday was WTI crude oil. Crude's been making a recovery for several weeks now. There are fundamentals driving these. They are uncertain fundamentals in that there's talk of the major producers capping production again. But interestingly, that appears to be words, because the cap on production would really, they're talking about now, is having Iran, for instance, substantially increased production over the last time they tried to cap it. We are seeing crude oil supplies in the States, or crude oil inventories in the States, have been decreasing. So there is certainly potential for more long side on crude oil. Personally, I'll be looking for a break of this trend line, and then for the first time for a long time, I'll have a longer bias on crude oil, because of the fundamentals, it has been difficult to trade through this period. We've continuously been looking for tops, but it's just followed through. I have to admit, at this level yesterday, I looked at an intraday trade long, decided not, and missed out on a 5-to-1 trade. But I just didn't have significant or sufficient confidence in the fundamental side that it would continue above what's quite a significant level there. Okay, guys, that's it for today. A very quick reminder, Tuesday next week we've got the next free trading event, 4 hours of free trading in London. If you're interested, phoenixblue.co.uk is the website. Go there, leave us your details. If you can't make that date, leave us your details, or or when you will be available and we can potentially meet you outside of these meetings. So that's it for today. Have a good day's trading, a great weekend, and we'll be back with you on Monday. Take care.